RIM TV coverage of the 2015 RIMS conference is brought to you by Inform Applications. Aon released its Global Risk Management Survey here at the RIMS conference this week. We spoke with Rory Moloney, CEO of Aon Global Risk Consulting, about the report and the major drivers changing the way risk is assessed, managed and transferred. Here are the highlights.
So in terms of the top five, what's come out on top this year is brand and damage to reputation. Number two has come out has been economic recovery and slow recovery from the economic downturn globally. Number three is around impact of regulatory change. Number four is international competition. And number five is talent. If I dig a little bit deeper in terms of a couple of other interesting ones in the top 10 for us, interesting, I think cyber has moved in at number 9 for the first time ever. This is something I think we predicted back in 2013, something that's important and something we're going to see continue to rise. And I think also, we have seen a movement into the top 10 of third-party liability and property damage. Another comment I'd make probably about the top 5 and the 10 altogether is what we're seeing now is an increased connectivity of those risks. So, when you look at a risk like cyber coming through, yes, that's important, but often it may be the result of something like a technological breach, maybe a result of a disgruntled employee, in turn has a cyber effect, a cyber impact, but also then that can often flow through to a brand and reputation impact. So, key thing that we're seeing not only is the top 5 and the top 10 important, but also that interconnectivity of those risks. Yes, I think there were a few surprises, certainly from Aon's perspective in terms of the top risk. If I take a few, firstly, pandemic, that remains static at number 44. This coming off the back of a year where we have had the Ebola crisis, in Guinea, Sierra Leone, Liberia. And I think, on reflection, I don't think we have coped with that, exceedingly well. And I think there's something there for people to be aware of in terms of the future. So that's an interesting one that's still down there. Very surprising, again, to me personally and to the organization is in the area of political risk and terrorism. So terrorism did, become more significant. It moved from 46 to 41. But political risk moved back out from 10 to number 15. So again, I think, if you reflect and we think about the year that was, we've had the collapse of the Russian ruble, we've had China failing to make its growth rates, we've had the emergence of ISIS, we've had a lot of regional and governmental elections internationally, we've had a lot of regulatory change. Again, that's something I think, the corporate world should be keeping an eye on and something that, probably surprised us a little bit. A third area, and different again, is probably what I would call the area of employee and benefit costs. So, if I take a cluster of, risks in that space, absenteeism, aging workforce, understaffing, workforce shortage, they ended up, around 47, 42, 35 and 32 respectively. So that is something that, again, surprised us that they're down there. I think those risks as a cluster are beginning to present an operational risk and a P&L risk to companies. Certainly our data tells us just now that, US companies, if you're over the age of 45, you are 52% more likely to have a casualty incident at work, and you're 40% more likely to get involved in litigation. That's less about the impact of litigation, but a lot of it is around the ergonomic factors and the wellness factors that are important. So yeah, there's quite a few things that surprised us in the survey as well, which we need to work on. One interesting thing I think that's come out has been in terms of the I suppose the application of formal risk management functions. So what we're seeing is a 13% increase in the formation of risk management departments, and I think this is a trend we're going to see continue. I think it's something that's beginning to happen with smaller entities as well. Again, as a result of globalization, complexity of risks, people are beginning to see the necessity to have that disciplined approach, that focused approach. And certainly from our perspective at Aon, we believe it's an area that we can drive competitive advantage through the risk function as well. But essentially, I think we're entering the era of the matrix. And for us, we say at Aon, what makes a good risk manager these days? It's Superman or Superwoman, because in terms of the connectivity factor, we're seeing increased interaction now and anticipating more with HR, with finance, with operations, with legal, with IT. So I think that's certainly going to be a challenge, facing risk management function. I mean, interestingly, to offset that, I mean, what we haven't seen is any increase in the formation of chief risk officer roles. So that seems to have plateaued a little bit. But I think, as I said, we are seeing an increase in overall risk management function activity.
For more of our coverage of the 2015 RIMS conference in New Orleans, visit the RIN TV On Demand library.